We're not diving into a boring, passively managed ETF today. Oh no, this one's for all of you factor investing nerds out there. We'll first quickly explore the ridiculous performance of small cap value investing. You won't believe the outperformance over the last 50 years. And then we'll jump into what I consider to be the best ETF within the small cap value world, AVUV. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please eviscerate that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. We had 3 new channel members this week. A huge shout out to Shayla, David, and Denise. I appreciate the 3 of you joining the channel membership, and of course, a shout out to all of you that have been here all along. I hope you enjoy the perks that come along with the membership, and I really do appreciate you for making this possible. You know what time it is. Let's grow. Small cap value wins. I must admit that I prefer large cap ETFs when it comes to investing. I accept the lower ceiling for a more stable floor. Usually, the large cap companies are the steady eddies. That said, there is a huge elephant in this room that I need to address ASAP. Small cap value has weirdly obliterated the S&P 500 over the past 53 years. It truly is one of the winning factors when it comes to factor investing. Factor investing is targeting specific drivers, such as market cap, to improve returns across asset classes. My favorite factor is profitability, and we'll get into that later in the video with AVUV. I made a longer video about small cap and value factors that I'll link in the description below. We don't have time to cover the whole backtest in this one because the star of the show, AVUV, is waiting. Let me quickly summarize what I'm blabbing about. We're out on Portfolio Visualizer, and you can see Portfolio 1 is small cap value, and Portfolio 2 is large cap, and I pulled the actual asset class itself. So you see here 100% US small cap value, and then 100% US large cap, and this is VU. It comes out very, very close. So we are comparing small cap value to the S&P 500. And we're pulling from 1972 through 2024, so almost 53 years. That's a lot of data. Include year to date, yes. And just to make it a realistic situation, we'll start with $10,000 and contribute $500 per month. And no rebalancing because it's one asset each. So let's hit analyze. Here's that timeline of January 1st, 1972 to December 2nd, 2024. So almost 53 full years. Now, don't be too alarmed. You're probably falling out of your chair right now, but remember, this is 53 years, so there's a lot of compound as far as the nominal numbers here. But 53 million is what you would end at with small cap value compared to 19.6 million of large cap. It is unbelievable. Now, in the other video I mentioned in the link below, I break down a lot more details, some more of the whys, some different cherry pick time things. So I'm not going into too much depth here. I pulled as much as possible just to show that small cap value is a legitimate winning factor. Okay, small cap wins, got it. Now, let's talk about the biggest winner of them all. AVUV Basics. AVUV is the Avantis US Small Cap Value ETF. It is one of 2 actively managed ETFs that I consider the best in class for what they do. And the other one is JFT&x, in case you're wondering. As most of you know, I generally prefer low-cost, passively managed ETFs to keep the money in my pockets. I don't need to be paying for a fund manager's fancy vacations. AVUV does have a reasonably low expense ratio for an actively managed fund of only 25 basis points. I find that to be a steal for the value it provides. The exact methodology is proprietary to the managers. However, we do know some of the factor tilts. We know that it has a tremendous focus on value and profitability factors. AVUV will filter out the small cap companies with a high price to book or low operating profits. And while we don't know the exact screens and criteria and scoring system, we can assume that it is a passively managed system internally. It has a holding turnover of 4 to 7%, which is insanely low for an actively managed fund. For context, SCHD, a passively managed ETF, has a turnover of around 29%. And for the value tilt, the PE ratio is around 12, which is well below the small cap indices, which sit around 17, and the S&P 500, which is around 27. Okay, we need to save some of this for the next section. AVUV Key Metrics. The key metrics for AVUV are debatably the best I've seen in Seeking Alpha across the board. Now, I've seen plenty of ETFs that are better in each individual category, but this one is right up there as far as having the best, weakest metric, if that makes sense. Let's get me off the screen. I pulled up AVUV in Seeking Alpha, the best site to research stocks and ETFs. Link in the description below if you want to try premium out, save some money, and support the channel. And I always start out here on the summary tab. Now, the two heavy hitters here are the expense ratio, and we mentioned before, 25 basis points, extremely low for an actively managed fund that again probably is behind the scenes, passively managed technically. And the assets under management are just over 16 billion. This was like 8 or 9 when I was checking it out last year, so it's really growing and people are catching on to this one. And for the holdings breakdown, we have a pretty nice balance. It is a little heavy in financials at 29%. And then you have 18% industrials, 15 consumer cyclical, 14% energy, and then we drop down to about 7% of basic materials and a low 6% technology. And the low exposure to technology makes sense with the overall PE of around 12. These are higher value, lower growth oriented companies in general. And where AVUV really shines is the top 10 holdings. And I'm not necessarily talking about the names. I'm not gonna read them all off, but these are way different than what we are used to seeing on major ETFs, mostly because they're small cap names. But really over here, if you look, under 1% is the top holding, and the top 10 holdings, usually this is 30 to 55% on most big ETFs, is under 9. And there's 751 holdings that all get spread out with a lot of love. So this one has incredibly nice balance to it. On to dividends, my favorite tab, as many longtime viewers know. So this one doesn't knock the yield out of the park. It is ahead of the S&P 500, but it comes in at 1.48% of a dividend yield. But then when you look at the dividend growth rates, you have a solid 6.5% over the trailing 12 months, but over 3 full years, it averages going up 24%. And now you might be thinking, oh, but Jeff, it's too new, so this data probably isn't legit on the 3-year. Oh no, it has plenty of data and it has the full look back of a full year versus a full year. You can see here that it's grown its dividends for each of the last 4 years, and that's every year that it's existed so far. Let's jump more into that. Here is the dividend growth by year. So I was referring to a minute ago is a lot of times, if we were in 2022, you might have like a 200% dividend growth because the first year didn't have a full year of data. If it's a newer ETF, it's comparing a full year divided by fewer quarters. But in this case, the 3-year look back does have all the data, and it's actually gone up that ridiculous percent. You can see it starts in 2019 here with 21 cents per share, and likely in its first full-blown year, it's at 69, a very nice dividend. But then it jumps up all the way to $1.02 per share, and then $1.30. And then last year in 2023, $1.48. It's increasing its dividends at a very consistently high rate. If you're more of a table form person, you go from 20 cents, again, that's just the beginning, doesn't really count, but then 69, 102. You can see what these jumps look like just in table form. Very nice increases. Okay, I'm out here on the charting tab, and we're gonna see if this momentum continues here. Y'all probably thought I had a little bit too much of the Kool-Aid earlier when I said this might be the best all-around ETF I've seen in Seeking Alpha. So we're going to start on year to date. And first I'll explain everything I pulled in. So I have AVUV for obvious reasons. It's the one we're looking at. I pulled in a Vanguard Small Cap Value ETF, VBR. And then of course I gotta pull in the market, VU. I always like to see how things compare to the market itself, even though it's not small cap. And then V2 is the Russell 2000 index. This is the official index that AVUV seeks to outperform. So it's a little bit of like an S&P 500 for large cap funds to compete against. And then in a similar concept, we have the S&P 600, which is a better performing historically index than the Russell 2000, but they're both small cap market funds. And then I threw in CAF because everyone always screams at me for not including it when I do these. indices, so I'm just gonna make you happy. Here it is. It's just a small cap cash cows. And I talk a lot about cows in other videos, and I love that ETF, so I gotta throw in CAF just to see how it compares. And we're gonna start with year to date. You can see that AVUV is slightly underperforming the primary competition, and that's the Vanguard, small cap value, and the market at 18.5% compared to 21% for VBR and 28% for VU. And it's right in between the small cap indices here. You can see it's slightly outperforming the S&P 600, but it's underperforming the Russell 2000. And then, oh wow, CAF is really struggling at about flat for the year. And we zoom out 1 year, it should be more of the same. We actually made a little bit of a comeback here. So we tied VBR in the last 1 year, and we're still slightly trailing the market, which makes sense because large cap has been better. It's still just behind the Russell 2000. It's still just ahead of the S&P 600, and CAF is still bringing it way, way, way up the caboose at 8%. Now, zooming 3 years out, things get interesting. AVUV is well ahead of, by 11%, VBRO. It's up 44% to 33. And then it's actually outperforming the market, which is incredible over the last 3 years. Small cap should not be doing that. And for context, here are the small cap indices, the legitimate markets of it. The Russell 2000 is up 17%, and the S&P 600 is up nearly 20%. Meanwhile, AVUV is like, nah, I'll take the good ones only. Okay, thanks, bye. At 44%. And CAF gets a little stronger, but it's still only up 18%, making it the second worst on the list. And this is as far as we can go with AVUV's age here. We're at the 5-year look back window. I'm floored right now. I always look at this live with you guys, but AVUV is crushing the Vanguard small cap value. And that's not what really has my jaw dropped. I've picked it up off the floor now, but really what did it was VU, the market, which has been extremely strong over the last 5 years, is trailing AVUV, a small cap fund, by 10%. That's just wild. And again, for proof, here's the market in small caps, 62% for the Russell 2000 and about 69% for the S&P 600. And CAF finally stepped its game up a little. I'm looking, but it's still way behind AVUV. It is ahead of VBR, but it's trailing the market. But as we can see on the 5-year and really most of the other ones, AVUV is just dominating everything in its class by far, and it's even outperforming the market, which genuinely makes no sense. If you follow this investing stuff, this shouldn't be the case over the last 5 years of how the market's played out. I'm telling you, that weakest link, you thought I was crazy. I love the metrics and everything, but we need to see this baby in action. AVUV Backtest versus the top small cap ETFs. AVUV has put up amazing total returns since inception. Now, we can't look too far back because of how young this ETF is, but let's run with what we have. We're out on Portfolio Visualizer to run this backtest, and I've decided to pull in, of course, AVUV for obvious reasons, VBR because it's light competition from Vanguard being the small cap value, the better of the two markets, which is the S&P 600, and then VU as our benchmark since it lets us get 4 total. So we have the light competition, we have the official small cap index, and then we have the official market index. Let's just see how we do against a variety of competition. And again, I'm pulling as much as possible. It's only gonna be like 4 years and change, I think. We'll get into that here in a minute. We're gonna include year to date. We need as much data as possible. I start with 10,000, contribute 1,000 a month just to make a scenario in there. And then we reinvest dividends, yes, and display income, yes. So let's check it out. And we can see we only have just under 5 years of data from January 1st, 2020 through December 2nd, 2024. And here on the performance summary, we can see that AVUV turned that money into the most. In this realistic dollar cost averaging scenario, it turned into $118,000. Looks like the market VU was next at $111,000. And then Vanguard small cap value ended at $104,000, not too bad. And the small cap index ended at $98,000. On the year by year returns here, wow, I've been sick and I'm starting to lose my voice. I'm glad that this is my last screen record here. So this video is almost done. Just hang with me. But you can see here on the year by year, there's 5 years total only. So we have some bigger, juicier bars than usual. Our AVUV is blue, and then VBR is green. The S&P 600 is gray, and the S&P 500 is teal. And you can see we got off to a little bit of a rocky start with the small stuff here, except the market did all right. But then it had a great 2021. It crushed all the competition. And AVUV came back and won again by a pretty good margin actually in 2022. Showed a nice resilient floor there. And then besides the S&P 500, it was the king of the small cap stuff in 2023. And this year, the S&P 500's made a nice little run. It's outperforming a lot of these ETFs this year. In fact, for the first time in 11 years, it's outperforming my core 3-fund portfolio, which makes me very hangry. I hope that that changes by the end of the year. But you can see it's still right there with the other guys. And then when we take a look at these annualized returns, we see in the full nearly 5 years, it stands at the top at 16.3%, with the market being 15.3%, but it's way ahead of the light competition, with VBR being just under 12% and the small cap market being at 10.3%. And as we look at the 3-year, it's still the king at 13, VBR's down there at 10.4, and the S&P 600 is at 6.2, and the S&P 500 is at 11.4. We're still outdoing the indices there. 1 year is kind of, wow, that's really close actually. That's pretty crazy. 1 year, we basically have a tie between all of them. But then as we saw up there, year to date, the market is outshining them along with VBR. And again, these numbers will be slightly different because it's full months only, whereas the one up top went to the day. And the last thing I'd like to touch on these is we can see here for AVUV, the PE ratio is 11.68, which is absurdly low in today's market. Like in an overpriced market across the board, really, this is unbelievable. VBR, bringing in the same type of small cap value, is at over 16%. For comparison. And then the market itself is just above 17%. So, and I don't have it here because VU was the benchmark and I'd have to re-pull it, but I just did it for something else and it's right around 27. That 11.68 is incredible from the value perspective. The fact that it has outperformed the S&P 500 with the market conditions over the past few years is remarkable. Final thoughts. I try to keep it real when I'm making these videos. I don't want to sit here and tell you I'm thinking about buying every single ETF that I discuss. Of course, I only review ETFs that I think are worthy of buying and holding, but I also value my simple 3-fund portfolio. I'm genuinely on the fence when deciding if I want to pick up AVUV. Small cap value has put up superior results for over 50 years, so I don't feel like I'm caught in the moment here. Even beyond that, I think this small cap has a nice run in store, in general, after the severe underperformance over the past decade. My channel members will know if I end up buying it the day that it happens. For everyone else, a future portfolio update will have you covered. Check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated, freedom is not. Thanks for watching, and I will see you here in the next one. Peace.